Heidi ho, everyone, and welcome aboard. Thank you, Marlon. It is Thursday's edition of Trading Buddies. Thank you for joining us and for being our trading buddies. Of course, my trading buddy will be along very shortly. He's just getting the late mail and probably placing a trade or two. Who knows? He'll tell us all of that when he joins us very, very shortly. That, of course, is Ash. And let's get straight in, shall we? And have a look at the... Oh, I just got a weird message. I hope it didn't mean too much. And have a look at the pound versus the US dollar. Not sure how that would have gone during the week. We might have a look at that a little bit later if we've got a chance so to do. If we were below here, which looks like we may have been, that might have been a good one. Yes, sorry, Wednesday. Thursday. Range in here to here. That doesn't look so good because you would have been below halfway. I'd say that might have been a loser. Let's see how today goes. All right, so here's our range. The open of Tokyo is right there. The current candle, of course, is right there. So our open of London session will be the next one on the hourly chart. So our range is this one and this one, low to high, high to low. And this is the midpoint. So we will place an order short. Happy Thursday to you too, Paul P. We'll place an order short at that point in a couple of minutes' time. Why would we do such a thing, you may well ask? Well, we're testing the system out and we'll get there eventually to find the right way to do this. But the current system is exactly that. We locate the range between the open of Asia session and the current candle, which of course will be the range between their Tokyo Open and London Open, which happens in a minute or so, or a couple of minutes' time. Then we pick the halfway point, and if we are above the halfway point when London opens, we place an order short at the halfway point with our first take profit here at the bottom of the range. If it were the reverse and price was down here, we would do exactly the reverse, place our order here and put our first take profit at the high of the range. Stop loss, of course, goes if we're going short at the high of the range, if we're going long at the bottom of the range. First take profit is a bit of a misnomer because I'm not taking profit at all. All I'll be doing is moving my stop loss to entry, because the whole purpose of the point, or the whole point of the exercise, God, I haven't been drinking either. The whole point of the exercise is to trade a breakout. So we're not after this amount, we're after, something more like down here somewhere. So that's the whole point of the exercise. There, I got it out eventually. All right, let's place this order. It will be, as always, guys, at very, very, very minuscule risk, small as you can possibly go if you want to follow it. It's a good way to follow it. Just go very, very, very small micro lot. Smallest you can go, and the entry is going to be at 1.1822. 1.1822. Stop loss is going to be at 1.1861. And we'll get rid of the take profit pips. We'll go to TP1 and we will put that one to bed and make the level 1.1783. Okie dokie. At that point, we will take nothing off the table, as I said, but we will move our stops to entry. TP2, we know what that is. What you can either set it as a target or as TP2 and take 100% off. It's 2.5 to 1. So if the risk in this case will be 22, 39 pips. We would go 2.5 times that, so 78 plus 19.5 is 97.5. let's go with 97, shall we? I like 97. It's a good number. Don't ask me why. I've got no idea. 97 pips from there, would be 1.1825, if my maths is correct. So you can put that either as a target or TP2. We'll put it as TP2. Forgot now. 1.1755. Is that what I said? Or something
Trading the
like
first
that.
when you're ready as well, mate.
Right, mate. Well, go now, and I'll fix this when we come back because it's not important.
All right. So the trade is for a long position, and I'm going to show you where it's at. So I think maybe grabbing this. Oh, hold on, let me just share my screen. There we go. I think grabbing at this this weekly pivot is likely, not aiming for a lot, maybe 10 pips or so, just to the upside. Couple of areas here. So what I've done right now is just gone in half. Because this is high, isn't it? So I don't want to go in too heavy here. But I'm going to take the other half down the bottom here. So that's going to be around about 10 pips below. So you're looking around about 7,500 for the second position if I get it on. As I say, I'm just going in half right now because it's a chance that this doesn't come back, and I don't want to miss out on the trade. So let me just set my other one up as well, just in case I need to go in again. There we go. Okay, so half the position here looks like just aiming for just a little bit at the top there is going to be the target, and then if it comes down, then I'll be going in again here. FTSE looks pretty good today. Only one stock to the downside. AstraZeneca, the biggest company in the UK, saw one of their breast cancer treatments actually pass through Japan. So pretty big news. That's up 1% right now. Shell and BP still kind of pushing the energy markets higher, and we got the mining stocks as well, all pushing higher. So looks like a pretty bullish session on the FTSE 100. I think the ultimate target that you could aim for is the trend line, which is could take us another 30 or so pips to the upside here, and it might even take us back to the highs. That might even kind of like run in together. So looking for a pretty bullish move on the FTSE. And if you look around the grounds, looking across at the NASDAQ, not quite tested the trend line just yet on the NASDAQ. So that's got a little ways to travel before we hit that, which is bullish for the FTSE. We're sort of like going to compare everything, as it is across the board. And you look at the S&P. S&P looks like it's got some room as well if you draw the trend line from the top here. So that's got a little bit of room to test through the daily pivot. It looks like that may well go up to around about 42.10. So looks like about an 8% move on the 0.8% move, sorry, on the S&P should also help the FTSE out. So just to summarize, mate, looking for a long here on the FTSE, not looking for too much in the ways of profit here, but I wanted to touch this weekly pivot before taking anything off the table. If it comes down, then I'll be pushing it in again and also aiming for that weekly pivot. And then if it breaks through and settles at the top, then I'll look for a retracement to get back in again to go here. So I'm just after first contact, really. So early doors this morning, just a quick one, just to get us up to that weekly pivot.
Happy days, mates. Any reason why the market has, I won't say turned on its axis, but a little bit of a rally going on around the place? Risk on potential?
Well, we just had GDP numbers from Germany, which showed a little bit of growth, and I don't know whether that might have helped the market out just a little bit, but I don't think it's really that. I think what's going on is that Jackson Hole meeting tomorrow could throw up something that the market doesn't expect. We're all expecting that's the time to sell it off. Two things could be going on. Big guns might be pushing people back into markets so they can sell at a better price. That's a possible scenario. Could be that that you know, the
That's my
expectation.
scenario.
Yeah, well, you know, these things do obviously happen, but whether that's the case, I don't know. Could be that Jackson Hole, the expectation of Jackson Hole is, you know, maybe not as, you know, as concerning as people should think that they should be. So people might be just kind of thinking about that aspect. You know, they're sort of thinking that everybody's sort of thinking negatively. That's a great time to buy. The FTSE dipped down to 7,400 yesterday, which was the buy zone, and that's now pushing to the upside. The Nasdaq and the S&P still look bearish. FTSE looks very different. You know, the other thing to consider with the FTSE is that it is obviously much more subject to what goes on with the pound. Now, with the dollar pushing so high, that devalues the pound, and that pushes people back into the UK stock market, which is why that buy the FTSE, sell the Nasdaq trade is such a good one. You know, it's one that people quite like. So so it could be sort of you know, a number of things, mate. But I think it's probably more that the market probably got ahead of itself in the sell-off before it really knows what's going on. So we're sort of rebalancing some of the expectations by maybe sort of, you know, being slightly more bullish on the stock market, I think.
Yeah, look, not in love with the market this week, I've got to say. I think it's a little bit difficult to read, and
Yeah.
maybe the moves overnight, which have been, I guess, greater than most during the week, are telling us which way to go. And to me, that's not in the direction they went. It's in the opposite direction. But we'll see. We'll see how that all pans out.
Yeah.
Righto. Back to the pound, and I'll give you that number exactly if you like. Not that anyone should be putting, you know, any great faith in this at all, by the way. But I would like to continue this exercise until we prove it either A, wrong or right. So let's go with that and have a quick look and see what would have happened during the week. The take all is 97 pips, which is whatever it was. I can't remember the level. It doesn't matter. It's 97 pips. Okay, so let's have a look at yesterday. Yesterday, there was your range. So that was the high. That was the low. Wow, tight range. Midpoint. Let's say that is, well, don't let's say, let's measure it. 40 pips. So 20 pips from 117.99 would be 118.19. So there's your midpoint, 118.19. Right there. At London Open, we were bang on the level. I would suggest you don't trade that. You're just absolutely bang on the level. So that would be a no from me anyway. Had you done so, where you're going to put, I don't know where you're going to put your entry, frankly. But anyway, here's what it is. On Wednesday, what's today? On Tuesday, where's 2 a.m.? That's there. So that's Tokyo Open. 9 a.m. is there. This looks like a bottler. So bottom of the range is there. Wow, you've gone right from the bottom to the top. Awesome. Top of the range is there. Mid-range, we got 117.27 to 85. 85? 85. So 58. So 29 pips from there would be 117.56. That's going to be a midpoint, which is there. So you're clearly below the entry at London Open, which is there. So you enter there, you don't get taken out with any bar, any one of these, and you get all of that. So that would have been an absolute winner. 2.5 to 1. Would you have got it? Good question. Maybe it wasn't an absolute winner. Doesn't look like 2.5 to 1. There's your entry. There's your risk. 28 pips. So 56 is 2. Half of 28 is 14, 70. 70 pips from there. Oh, you got it easy. So that was a winner. 2.5 to 1 on Wednesday. Tuesday. I think Monday was a loser from memory, and I think I escaped it because it expired. Let me just check that before we. There is 2 o'clock. Yes. There is 9 o'clock. So your range is here to here. I won't do this accurately. I can see that you're well above. You were well above the. Is that right? Here to here. So you were above the midpoint, which was about there. Oh, you would have got TP1. You would have got 2.5 to 1. Monday was a winner as well. Oh, mine exploded. So 2 winners this week. Well, that's good. 2 2.5s. And did I say yesterday was a loser? I can't remember. Anyway, I'm wasting too much time on that.
Is this you know what, mate? Is this an updated version of the pound dollar trade?
Yeah, I've changed the rules.
Okay.
So what we're now doing is I'm isolating the range between Asia session.
Yeah.
So the open of Asia and just before London Open, obviously.
Yeah.
So today that range is from where's London? Tokyo Open is there. So the range is here to here.
Yeah.
We're on the current bar. We go halfway. So we find the halfway point. That's our entry point. And if we're above the entry, we go short. If we're below the entry, we go long.
Oh, okay.
Stop loss is the top of the range if we're short, which we are today. And first take profit is the bottom of the range. Just move stops to entry at TP1 or the bottom of the range, and take our profit at 2.5 to 1.
Got it.
So 2 of those have won this week. I can't remember what happened yesterday. I did show you what happened. I'll just quickly review that so I know for my own edification. There's Tokyo Open. No, there. So there's the top of the range. There's London Open. So midway point. Oh, that's right. It was a bang on the entry. So no trade. You've got to be away from it. You can't be on it.
Right.
So the entry would be on halfway. So no trade there. So 2 winners, no losers. Let's see what happens today. So that's 5% in the bank if you're trading it at 1%.
I wonder if there's
that's a decent week.
It is a good week, Matt. I just wonder if there's a way a robot could trade this. Could certainly back test it.
Yeah, I haven't got a robot.
Well, do you know what? I mean, I've dabbled with robots, but I'm not very good on them. I've got to say, I've got no patience with them, I think is the problem. But Lloyd is the one, isn't he? I mean, he can tell us.
We need Lloyd on the job, don't we?
Yeah, if it's testable. I'll see Lloyd in Bali and I'll talk to him about it.
Good God, that's 4 months away.
No, it's not. No, it's not. It's what we September, October. It's about a month and a half, 2 months away.
3 months away. It's end of November.
End of November, so end of September, and 3 months away. Yeah, right in between. Yeah. Well, if I speak to him before, I'll talk to him then. I think the problem is that there's not a level. Now, I don't know whether with a robot you could tell it the low and the high between 2 time periods, which I suppose you could.
I'm sure you'd be able to do that. Yeah.
But I don't know whether then it'll be a tricky one to program. But yeah, maybe maybe we'll speak to Lloyd and see if it's possible. He'll know if anything else, if anything is at all possible, then he'll be able to sort it out for us.
He's the man. All right, let's hook up with a meeting there at some stage.
I mean, the other way is that we do it manually, but that's a lot of work. And I tell you what, mate, where it becomes interesting, because there's a few sort of permutations with this sort of thing. You could do, you could if you could figure out with a robot what the parameters are, then you could test every single currency to see which is the one that provides the best results. And then you could also test breakouts of the area. To see whether that's a part of the result. But the thing that I'd be most interested is adding things like seasonals, testing seasonals with the strategy, testing COT data with the strategy, testing fundamentals with the strategy, and then obviously combining maybe COT and seasonals, maybe COT seasonals and fundamentals. So I think that there's a few things that you could do here, because if it's a valid entry and you've got the underlying aspect in your favor, then I wonder whether it just becomes something that you could almost set and forget as soon as you've sort of like you've done the back work, whether you could set and forget it as a valid entry on a week by week basis. So that's all you're not actually trading whether it breaks out one way or the other. You are actually just trading in one direction for the whole week, only if the parameters set up. So if it was pound dollar short every week, then you only do it if this particular setup sets up. If it's the other way around, you just don't touch it.
100%. No reason why not. I mean, this is how we form strategies and trading systems. So exactly, there's no reason why it won't be testable.
Do you know what? If I wasn't
if the results are good,
if I wasn't doing 5 different spreadsheets right now, then I would take it on. It's just one of those things that you just, you'd want to get some back data to start testing. You wouldn't want to go from today, let's say. You'd want to sort of get back data really for the last month or two, just to start to formulate a bit of an idea of whether it's which things you can start testing, because you can't test anything without the numbers, and you need at least sort of 2 to 3 months of numbers, really.
Yes, 100%. As I said, I'm still trying to remember how I used to trade this, 15 years ago, and I can't. I just can't. But this rings a bell. What I'm doing now does ring a bell, because initially we're just looking to trade the breakout of whatever the chart was saying in a particular time frame. Right now, what we're trying to do is still exactly that, but we're, I suppose, hedging our bets a little bit by only trading in the direction which is opposite to the prior session, if you like, which is very much it's a thing in my opinion. Oftentimes, and it's not every time, oftentimes you'll get London session changes to US session. Oh, hang on, different traders, we're going in the opposite direction. Same between Asia and London, and that's pretty much what I'm trying to achieve here at the moment. But time will tell. I mean, there's only one way to do it. Let's just see how it works.
Good winner, mate.
This week, so far, so good. Righto, let's update everything that I am doing this week or have done this week. I think the
first is a winner, mate. Just to kind of give you an update on that. First is a winner.
Cheers,
awesome. Closing those conditions out now, and well done for anybody that managed to get into that.
Well done to Ash as well. Good stuff, buddy.
Thank you, mate.
I can't remember. I think I was Euro Aussie looking for a long at some stage. Maybe not.
Yeah, I'll tell you what I wouldn't mind looking at with you is the Aussie CAD, because that one is the trade of the week, and yet that currently is very, very bullish.
Okay.
Yeah.
Oh, that's EuroCAD. Well, my trade of the week, CAD Swiss, and it did break as we anticipated that it would, and gave us this very, very nice false break. False breaks is going nuts at the moment. Every false break I'm trading is giving me something, so it's fantastic. Unfortunately, overnight, the high of this bar was 0.1 of one bloody pip from taking my first take profit.
Oh, that is irritating.
And of course, my rule is when I wake up in the morning and see that that has taken place, and this gap down to here, I had definitely a case of the SH1Ts. And my rule is if I miss that by, a pip or two, then I just move my stops to entry straight away, which is exactly what I've done, because I don't want to turn a potential winning trade into a losing trade. At this stage, today's candle went, believe it or not, 0.4 of a pip above the initial TP1. So would have got the TP1 anyway, but the point is, this is now a safe trade and can only be a winner. What happens next, I won't say is not important, but to me it seems this is on its way. It's got a problem in the monthly pivot, but this is a clear break of that that resistance area. This is the issue, of course. It's got to get through here yet. I'm hopeful that when it does bounce off here, if it does bounce off here, that we only come back to the daily pivot and on, and away we go. But the trade of the week has panned out to a degree, I'll put it that way. Also had orders on, wow, how's my memory going? Pretty sure it was Aussie Euro Aussie. Yeah, it was, because I can see the trade, and hasn't even got near an entry. So once again, false break, pretty much exactly the same trade. This time, there's the entry, there's the stop loss, bang, price has just gone down. So no entry there, and that's now been cancelled, of course. Aussie Kiwi still waiting for this to go short, and it just keeps going long. The further it goes, the better it is, though. We're going to get a good price on it eventually. Aussie Yen still waiting for that to tell me what's going to happen next. At least now we've broken that trade line. And as discussed earlier, the market seems to be in a risk-on situation at the moment for whatever reason. And I think we'll be given an indication as to whether that's to continue, what happens here. So I'll be looking for, in the first instance, price to either close on its high, come back and retest the trade line, or come back underneath the trade line and retest it from below. That will be my directional bias for this pair ongoing in the short term, but at the moment there's just nothing that I can do except wait and see what happens at that trade line. Euro dollar, completely exactly as you would anticipate would have happened throughout the week, hit that support level and hasn't moved, frankly. It just can't get through there. Why would it? It's sitting at parity pretty much. Why would it not? Just everything makes sense there to me at the moment. What euro dollar's doing, it is at a support level. It is at a massive inflection point, that being parity. And I don't expect that it would go through there easily. It hasn't at this point, and it's very much, of course, an upside down version of this, which is the dollar index, which went 100% to the pip of that high. And this was the range that we anticipated. It was either going to turn it. It would either be here or here. And of course, here is where it's decided that it will turn.
I think this is the most interesting of all the charts today. I mean, it's, we got the Jackson Hole symposium starting today, and this is what it's all about. This is really why the market's doing what it's doing. The dollar's going down, markets are going up. So what's the expectation from Jackson Hole? The United States is still suffering with very, very high inflation. It's potentially peaked. We've seen Europe and we've seen the United Kingdom for one or for two, showing that the inflation hasn't peaked, and there's still further action by the central banks that need to take place. But in Canada and the United States, we have actually seen a number which was less than the previous print on CPI data. So does that kind of possibly change the mood in the United States? It could be significant, because if it does, then we've had an earnings season, which actually, it did many of the expectations. So how much further do they go before earnings seasons start to become quite negative? Well, they might have a little bit more room. So if Jackson Hole results in Jerome Powell saying, we're not going to go too much further, those last CPI prints were actually very positive, from our perspective. So we're not going to go too much further. Then the market will likely start to settle down a bit. It's not going to necessarily rally. It may not tank, but it might settle down a little bit and just edge higher, just start to edge a little bit higher while the dollar comes down. I watched that video, mate, that you sent the about silver.
Did you? Okay.
Yes, I did, and it is very, very interesting. And I'd say it makes you want to go and buy gold and silver. I don't know whether those guys have got some skin in the game with that stuff, because it does seem almost like one of those channels that promotes the products that they are further exposed to. But
I think that's quite valid. But the points they make are also quite valid.
The points they make are very valid, yeah. And I guess it's one of the things that we've talked about as well, about the difficulty with the dollar. It's really going to be more about whether there is signs of cracking with the US dollar than anything else. And if you look across the board, would you, and this is, I think you've said this before, what do you exchange the dollar for? Because you can't exchange it for the euro. The euro numbers are absolutely atrocious. Incidentally, we've got the ECB monetary policy minutes today. That's another reason that the market is probably rallying into that particular statement. Because what can they say? Trade balances are atrocious. The River Rhine is now recovered enough to kind of start the coal and diesel been pushing down the River Rhine to relieve some of those industries that need that energy to keep the power going. But trade balances are absolutely atrocious. Current accounts are really very, very poor. Retail sales are kind of showing that the consumer's concerned. Business confidence indexes are showing the businesses are concerned. You've got other consumer indexes showing that they are not in a good place. That the general everyday man and woman is that they are not in a good place. They're not happy people. And then you've got this inflation number, which is north of 8%. So what are the ECB to do? How can they possibly raise interest rates, even with those inflation numbers? And then you go on the other side of the argument and say, well, how can they possibly not? And it is very, very difficult. This is where you start to say, well, there's no way that the reserve currency can, at this stage, be the euro. So then, even though the dollar is potentially weak going forward, what's the alternative? Well, it's none of the developed nations' currencies,
no,
that's for sure.
No.
Could be gold.
That's very true. Could be gold, could be cryptocurrency, could be... Yeah, no, it's not that big a race field at the end of the day, you wouldn't think. So...
Do you know what? I saw
some would say the yuan or the renminbi, if you like. I don't know.
Well, the yuan, that's in trouble as well, really, because... they've, the Chinese data has also pointed to problems in China, and Apple have now started to go over to India. Now, I don't know whether this is a shot across the bow or whatever, but Apple have now gone over to India to manufacture their next phones. So that's a big company moving out of China, not using the manufacturing industry in China. Now, I don't know if that, as I say, whether that's the state of things to come. I think they're kind of fed up with the regulations that China are putting on them. But Chinese economy was already quite damaged. We've still got COVID issues over there, and you've got a central bank which is actually adding liquidity to the market. So they are seeing the issues. They're seeing the slowdown. So they're actually quite dovish. So they're on a completely different side of what's going on. The housing market over there as well is something that looks like it might well have hit a bubble. And we're talking about a market which is, look at Evergrande last year. That story just went completely under the carpet. Earlier this year, with a company that is that big collapsing, and we've just we've seen no result of that, no kind of aftermath of that particular situation. So that's sort of bubbling in the background.
I'm not sure that's unique, frankly. I mean, that's happening here in Australia too. We've got lots of issues around building companies going bust because they've got all these forward contracts, and they're all priced in, right? So they've been quoted, and the price of goods has just gone through the roof. Freight, raw materials, tools, you name it, everything's gone through the roof. So they can't produce the houses, if you like, at the price which was quoted, if they can even get the material. So you've got a lot of even middle to big size building firms actually closing their doors. And you've got people who have paid their money for this work to be done, or a good chunk of money, a huge deposit for this work to be done. The house is sitting there with, you know, a bit of foundation, maybe a frame on it. That's it. Builder goes broke, they're stuck. Another builder, who, if you can actually find one, won't touch it because X, Y, Z. They don't believe in touching someone else's work, or it's been sitting there for too long, frames warp, whatever the case may be. So I don't think that's probably a unique situation, is what I'm saying. I think we find that that's going to be a worldwide phenomenon, and a very sad one, because people are just going to be completely no house, no money. Ouch.
Yeah.
That hurts.
Yeah, absolutely does. It does hurt. I've got let me just give you some interesting numbers that I found yesterday as well, which if I can,
Gary, I will have a look at the game changer bars in a minute, mate. Yep, for sure.
Tell you what, I will see if I can find this. I read a really interesting statistic, and maybe we could leave this hanging for a period. Since 2017, how do you think Bitcoin has compared to some of the big names? Amazon, Apple, Tesla, let's say.
I would have outperformed them by many percentages, I would imagine.
So now I've got to bring up this story. So I'm going to leave that hanging just for everybody to kind of have a think about that. How has Bitcoin performed in comparison to the likes of Apple, Amazon, and Tesla since 2017? Now you go and do your thing, mate, and I'm going to see if I can find the statistics.
All right, mate. Happy days. Where was I? And I'm still screen sharing, right? Okay. And we're talking about the dollar index. That's right. So, you know, we spoke about this last week, and this was really the tipping point, the monthly pivot. And if it broke above that, it was going to here. You know, you don't need to be a rocket science to work that out. And that's been the case. What happens next is the most important thing. And I can't not see this, frankly, coming back to here to retest this level, which pretty much is the breakout level. It's either there or there, one or the other. So I believe that will return to that point. Let's call it the weekly pivot, because it's in between the pair. So I'd be a seller of any rally here on the US dollar, which means, of course, I'm going to be a buyer of a strong currency, if there's such a thing, against the US dollar. I think that probably needs to be the Aussie, the CAD, or the Kiwi, frankly. And they'd be the ones that I'd be looking to buy if we do get, pardon me, a lower high here, and that'd be the point I'd be looking for. So price back to here, then I'd be a seller of the dollar, buyer of those other three. I don't think I'd be too keen to trade long the euro, long the pound, long the yen. They don't make sense to me, but the other three do. I also placed an order this morning for the first time, I think maybe it's the second time, on the Aussie 200. And of course, not knowing that the market was going to go risk on, I put an entry underneath yesterday's bar, I didn't put my stop loss, I didn't use the candle. I actually used the previous day's candle and the open of the previous day's candle as my stop loss. Of course, it all means nothing now, but really what I was trading was a false break of this resistance trade line. I'm inclined to leave it there just for today, but I also see the opportunity for this candle to go to the daily, the weekly pivot today. And if I take that one away, that's going to look like a false break of that resistance trade line, which again would be perfectly valid for me. So I could then put an entry where my stop loss is pretty much, and my stop loss above the weekly pivot. So that's kind of what's in my head for tomorrow on the Aussie 200. You'll notice that I'll be looking at these indices a whole lot more because I think that's where the value is at the moment, frankly. I won't talk too much about the NASDAQ, but it's the same. It's exactly the same. The S&P is pretty much the same, looking for false break there as well. So I think we're setting up here for some shorts for me on all of these indices. That's a long tooth one, that's silver. Whilst I'm a massive fan of silver, I'm not a massive fan of paper silver. And I think this can fall away, retest the lows. Gold, exactly the same. It's got a bit of work to do to get through the weekly pivot and this trade line. And I'll be looking to sell this very, very shortly to test the lows. I'd love to see a reversal bar off the trade line or price get above it, come back underneath it and retest it. That would be a super duper setup. Dollar index we know about. Let's have a look at the game changer bars for today. There were three, as I recall: Euro pound, Euro yen, and Euro Kiwi. All about the euro. Interesting. Euro pound first up, and suggesting that we go long here. You'd have to drag me kicking and screaming to go long at that level, trading into an untested weekly pivot and a monthly pivot. No, thank you. Not saying it can't go, of course, but you're seeing what the pivots can do to price. And right now, we're seeing a reaction off that. If you go a little bit tighter, you're actually seeing the pivots do their thing. So weekly to daily, I'd say we could have a little bit of a ping pong match in here for a while. And no interest in that one at all, Euro pound. And, you know, from the outset this week, I think we said this was a toughie. No matter what you think, it's a toughie. That said, I can totally see a scenario here that would get me interested for a long, maybe not that trade line, but this one, where not only have we had a break of that trade line and a retest of it, it's also a double cross on the monthly pivot. It's also an inverted head and shoulders. If that's the case, that's the neckline, which has been broken and retested. But we're back underneath it, and that's the issue. It's so far from clear, it's not funny. But I can see the inverted head and shoulders, I can see the neckline break and retest. It's a monthly pivot break and retest. I'll probably be disappointed if I didn't catch that and it went to here. But I think this is a bit of a mess, frankly. And actually, if you go back to the weekly game changer bars, this was on that list. Euro pound. Wow. That one makes more sense to me than does the daily, I've got to say. You get your stop loss here, you can get your entry here. I think that's a far safer trade than would be the daily. Can I talk myself into it? As we've spoken about, you know, it's a race to the bottom, this pair. Which one's worse than the other? I don't know. I really don't know. But it's suggesting we go long. Maybe I have a look at tomorrow's candle. Or, no, I wasn't interested in placing the weekly in the first place, so why would I now? I'm not going to change my mind. It's too hard. Euro yen's the one Gary wanted to look at, and it's suggesting nice little bounce point, got to say. It's got a similar issue, but it's probably a little bit better than is Euro pound. Why? Well, I think now because you've been given a lead in, you can get your entry above today's bar. Put your stop loss below yesterday's bar. which means if you're wrong and the weekly pivot is indeed going to offer resistance to this, then you shouldn't be taken into the long trade. The one thing that would bother me here with that scenario is, where is the major, I'm going to call it the boss cocky from this point forward. And what I mean by that is, what is the dominant feature of this chart? I'm going to open it up actually. We'll go to Euro Yen. And this is really important to understand if you're thinking about trading game changer bars. It's not about trend per se, but it's got a lot to do with it. So you've got to go to the primary chart and really use what you know about technical analysis or technical trading. But you've also got to use your imagination a little bit. So if I look at this chart, I want to know a couple of things. I want to know why the market is moving from a technical perspective in a direction. And for that, I need to know what the major pattern that's driving the market is. And when I look at this chart, it can be totally confusing, but I see a few things. Let's share those just because we can. It may give you some idea as to why. You see a double top here. Is that driving the market? It might have for a while, kind of been broken. I see a head and shoulders here. Is that driving the market? Yeah, not really. It's been cancelled out. So I'm not thinking short's really the governing factor at the moment, or the, as I'm going to call it, the boss copy. So what do I see? Well, at the moment, and I'll be argued against for sure, because people say, oh, hang on, that's not the same level. That's not the same level. That doesn't matter to me. If it looks like a double bottom, to me it's a double bottom, because the market's been there once, couldn't sustain it below that level. It almost got there for a second time, certainly couldn't sustain the level. So to me, that's the boss cocky at the moment. That's what's driving the market. And if you were to draw a trend line, then that's kind of where we're going as well. So it's a monthly chart, don't forget. Then I see another inverted head and shoulders. Then I see another double bottom. And then I see a big W. Completed, done, dusted. So we're in a new phase. And the new phase has taken us above that previous cycle. The issue that we would have is trading through that level, but we're nowhere near that level. So then I have a look and say, okay, my boss cocky is this. That's still driving the market, because every time we see a reversal pattern, it works. It works. Not sure what that is. I'll go a little bit to it works. So every time you see a higher low, inverted head and shoulders, double bottom, it's going in the direction that this told you it would. This being the double bottom in my case. So it's not always a level, but if you drew that across there, you'll find it probably is. That's still a double bottom to me. I don't care what anybody says. To me, it's a double bottom. And we can argue the point, but there's no point arguing the point, because it's not, if it's not what you see, it doesn't matter. It's what I see, and I trade off that and make money off that. That's all that counts. And if you see this is the governing factor and trade every game changer that's telling you to go short, then probably you're on the right track as well. So, you know, there's a case, there's always a case for the opposite side. But let's now go, this is a long way around answering this question, I know, but I've got a bullish outlook in mind, right? It's not set in concrete. on every single time frame. That's for sure, because you can trade it in different directions. But what did I say? If I'm looking to trade long, which I am, all I need to see is a reason to do so on a time frame that matters, not a 30-minute, not a 15-minute, not a 5-minute. So I can see this game changer bar here on the euro yen at a substantial level. So it's bounced off that level. We can see that. The next thing we see on the daily chart is there's that bounce there. We're now looking at, what have we got? A mess at the moment. But I think every time we see a game changer bar, you get a rally, right? Game changer bar, rally, game changer bar, rally, game changer bar. We're expecting it to rally. But rally to where is the big thing. If you're not seeing enough open air or blue sky, as we call it, to take profit, then why would you bother? Because there's going to be a better setup than that. And the better setup than that's going to be a break of that area, to retest of it. Then you can go, because there's blue sky here. Euro yen, what a tough pair. That's what I say about the market at the moment. It is so far from clear. It is not funny, in my humble opinion. But that is the way I would determine which way the market is likely and which direction I want to trade in. And if I see the game changer bars pointing in the right direction, in this case it is. There's no question about that. It's pointing in the right direction. But I wouldn't have taken the trade because of the weekly pivot. Now, as I said, Gary, I think it's reasonable because you can put your entry above today's bar, and you can put your stop loss below it. And if you're wrong, you're not going to get taken into the trade because the bears are going to bounce off that weekly pivot and they're going to drive the price down. And if you're a slingshot trader, you're going to look at that and see low test bar, low test bar, low test bar, and you're going to think there's an entry short underneath there, and I wouldn't argue against that. Wouldn't argue against it. And like I said, there's always another side to the story. But when the market's tight like this, and really you've got resistance above you, support below you, although the candle is telling you go there, and you know it's reasonable to take a profit there, why wouldn't it bounce off there and come back? It can, and it may well do. It's not a clear place to trade, in my humble opinion. So wait till you get the clear air, get it up there, bounce back, then you can go, because there's clear air here, plenty of blue sky. But trading in these tight areas, you can make money, there's no question. But is it really a great risk to reward trade? Don't think so. Maybe on a small time frame you can find one. There you go. You've got a break and retest of the weekly pivot. You've got a slingshot candle pattern. Hello, I can get interested in this. That could work for me. You've got a few shots over the bow. There's a slingshot candle pattern. There's another one. And now there's another one which has broken the level, come back and retested it. Untested daily pivot is a concern, of course, but I consider the entry there to be valid. I'd put my stop loss below there, however, but plenty of blue sky here. That's what I'm saying. So I think that's entirely going on with everything I've just said. Euro yen on the big picture. So the big boss is saying go long. The weekly saying go long. The daily saying go long. I get it. Why wouldn't you? So when this bar closes, I might join you, mate. I think that's a perfectly valid entry. Stop loss there. You might say you're trading into the high, right? And that's true. That is 100% true. It is a new high. So that doesn't concern me that much. I would want to be getting out, however, of part of the position before you hit that high. So it won't be a great TP1, that's for sure. But that is a valid setup for me. Wow, that was a long tooth, mate. Sorry.
That's good, mate.
That much time.
No, I think that's really good. I think that's a good bit of education. I found my data. You want to hear it?
I thought you might. You've had 3 hours to do it. Yes, I do.
So we are going to typically, as you were talking, I clicked off it to look at something else, but here we go. Right, so let's say you invested $100 into Bitcoin, 2017. Yep. So I'm gonna ask you each one of them. Write them down if you got a pen and paper next to you. So you're gonna write down what the.
Do you want me to answer this, or this is for our trading buddies?
This is for everybody. Yeah, this is for everybody.
Okay.
So every
this is the Thursday Theatre of Thoughtfulness.
Exactly. Well, it is very much that. Post in the chat box. So $100 on Bitcoin. What do you think it would have returned if you were to close your positions today? If you had $100 in Bitcoin in the summer of 2017, so you got 5 years of Bitcoin, basically 5 years. If you'd invested in Bitcoin 5 years ago, you invested $100. What's your return today? Same for Ethereum. Same for Apple.
Oh, I give up. Hang on. This is all guessing, right? So I'll go I'll go with X for Bitcoin.
Okay, Ethereum.
Do you want a percentage return, right? Or you want a dollar return?
You give me the dollar return, mate. Give me the dollar return.
What's $100 worth now? Okay.
Yeah. What's $100 worth for that? Yeah. So you got Ethereum, you got Apple, and three more, Microsoft, Amazon, and Tesla.
Apple, I'll go with Microsoft.
Yeah.
I'll go with same Tesla.
Amazon and Tesla.
Righto, got them.
Okay, so and nobody else has posted in the room, so maybe either do this in your head or ignore it altogether.
Oh, do you want me to post? I'll post it. Just see how bad. See how bad.
Okay, yeah. Post it so we can have a look. We can have a look.
Right. So we've got.
So if you had $100 in in the summer of 2017, what would your return be today? What's your $100 worth today if you'd invested that $100 in Bitcoin, Ethereum, Apple, Microsoft, Amazon, and Tesla? Actually, let's forget Ethereum. Because it's Ethereum.
Oh, too late. I just typed.
Okay, all right. Well, give us Ethereum as well. I might not have the right numbers for that.
Apple.
No, it should be right. Yeah, it should be right.
Apple, Microsoft.
Amazon and Tesla.
Amazon. We'll go with Tesla. We'll go with there you go. I'm done.
Right, let's have a look then. So BTC 1500, 1200, Apple 60. Interesting, mate. Okay, so now I'm going to tell you that that Bitcoin, if you'd bought $100 worth of Bitcoin in 2017, that would now be worth $465.
Oh, how disappointing.
Yeah, $465. Yeah, 3.5 to 1. Now, it's Ethereum Classic, so that's not going to be the same thing. But I'm going to move on to Amazon. Amazon would have returned you $284. So we're looking at Bitcoin 465, Amazon 284. So not quite double, not quite the double the price. And you know, looking at what you've written down, you thought it was going to be multiples of the return on Amazon. But this is where it gets kind of interesting. Then you go up to Microsoft. Then you go to Microsoft. Microsoft returned $379. So not that far from Bitcoin since the summer of 2017. Then you're looking at Apple, $419. So Bitcoin 465, Apple 419. Here's the kicker: Tesla, $1,290.
Well, I was close.
I think my point is, the point I'm making, and this is, you know, we'll talk to Simon about this next week. The expectations and the perception is you invest in crypto markets and you'll make really good money if things go well, let's say. I mean, obviously things haven't gone so well. So maybe if we were talking a few months ago, then this would have been blown out the water. I would still sort of like argue that Tesla would probably be sort of like relatively closely in line with it. But the point is that while people are sort of obsessing about getting into cryptocurrencies, actually, you could invest in something a lot more stable and not be too far away from the same, if not better, returns if you go for the blue chip companies. I mean, if you pull up a chart, mate, of the Nasdaq, I don't know if you can do that just now, but if you put up a chart of the Nasdaq, now if you just minimize that chart so you can see 2017.
2017 is just out of frame. We can go smaller.
So that's what we're looking at.
Okay.
So that's what you're looking at. That's the 5-year
that's
return.
June 2017. There you go.
Right. That's the 5-year return from the Nasdaq. So while sort of, as I say, we obsess about kind of cryptocurrencies and people get, you know, but people at the pub start talking about it like they have got they're part of some amazing secret club. Actually, when you sort of, I mean, okay, this doesn't bring into account the altcoins, of course, which, you know, the returns were crazy on some of that stuff. But, you know, we've been talking about Bitcoin and how much you're going to invest in Bitcoin to make all this money. But actually, if you'd invested in the last 5 years, then you're doing no better than stocks. And that would suggest possibly that the real run with all this stuff has gone, is past. You know, if you kind of weren't in early doors, you know, you may well have missed the boat on particularly Bitcoin.
Yeah, I think, look, history is going to prove that to be the case as well. And, you know, Tesla's a classic example. I haven't got a Tesla chart, but if you take Tesla from, let's go with 2020, because it's such a year, to now, I think you'll find the result of that would be horrid, as it is for Bitcoin, right? As it is for the S&P, as it is for everything. Yeah. Because, you know, we've had a turnaround, things have changed. But as you say, over time, the indices are going to outperform all of these newcomers because they are set. They've got established records, they've got established history, and the big money will invest where it's got certainty. It's got no certainty in Bitcoin. It's got no certainty in Tesla. It's got no certainty in, well, there's certainty now in the likes of Apple and Microsoft and the FANG, of course. But Bitcoin, that's why it's struggling, because there is no certainty.
Yeah, absolutely, mate. No, there isn't certainty in that. You're absolutely right. And if you'd been holding on throughout this whole period, and now, you know, just looking at the chart, Bitcoin did reach 65,000. It is now currently down to 20. So the move down has been vicious, and I guess that's the thing. Maybe the lesson here is, if you make money in a speculative market like cryptocurrencies, take it. Holding on is probably not the answer. You know, if you're talking about Tesla, Apple, Amazon, something that's eventually going to give you some sort of dividend kickback. I know we've had dividend kickbacks on Bitcoin, but one of the examples of that was something like Celsius, that is now bankrupt and selling a lot of their BTC to cover their bankruptcy, and many people probably would have lost their BTC. So it's not always, you don't always get the return back. A lot of problems with theft, and, you know, there's all sorts of nefarious things that can go on with these kind of unregulated industries. So You know, I as I say, I guess the lesson is if you've got something speculative, don't expect it to keep traveling, because it is the speculation. It would really sort of suggest that it is just going to turn around and all of a sudden start to plummet. And you could be holding on and holding on and holding on. So I guess hodlers maybe need to rethink their strategy.
It's all in the timing, of course.
Yeah.
Getting your money off the table, that has always made perfect sense to me.
Yeah, absolutely right, mate.
No
FTSE
matter
100
what, no matter
continues to
what you're
push
trading.
to the upside. It is pushing closer to that trend line that we talked about earlier on. But market looks pretty bullish today, mate. And you know, we've got, as I say, minutes from the ECB in a couple of hours, so maybe that changes things a little bit. We've got Jackson Hole starting, possibly that changes it. So be careful, but the market does look pretty good right now.
Okay, I'm just going to go through this for Gary, and the reason, it's not the only reason, but there is a reason that I'm a very bearish Aussie Kiwi, yet it just keeps going up and up and up, and that's perfectly fine, because it's going to give us a great price eventually. There's the next level that I see, which is 112.18, where we've failed to get since what, 2017. There's a funny number. Why do you use 2017?
That's just the report I read. 5 years.
Well, there you go. Well, 5 years on. And did you know, if we could play music today, I'd be playing Crunchy Granola Sweet.
You'd be playing what?
Crunchy Granola Sweet. Have you not heard Crunchy Granola Sweet?
No.
Oh, mate, do yourself a favor. Do yourself a favor. Turn the stereo on, or if there's such a thing these days. Turn the speakers on. Google Crunchy Granola Sweet and just let it rip.
Neil Diamond.
Yep.
All
I think it's 50 years today that album Hot August Night was produced or released.
Okay.
But seriously, Ash, sometime today, you've got.
I will. I'll do it as soon as the show's finished.
Awesome. I wish I could play it. That'd be fantastic. So here's the reason why I'm very bearish Aussie Kiwi. It's got nothing to do with what's happening fundamentally. It's all technical. And this level here, which coincides with all of these highs going through here, actually goes back to 2013. So we've been in that range, if you like, since that period of time. On the weekly chart, we're showing false break at the top of this range, a second false break at the top of this range, and here comes number 3, perhaps. I mean, it can't go to heaven. It just can't, in my humble opinion. Looks very bullish at the moment, no question, but I've got a funny feeling it's going to hit this level, then come back into this range, and the one thing I hope it does is give us a lower high. Now, if I see on the weekly chart on Monday, this candle looking pretty much as it is, in particular if it's hit that level, I'll definitely be placing an order underneath it with a stop loss above that range or above that level. Without question, I won't even think about it. That's why I'll be doing that. New Zealand floods, yeah, we've been through it here too, Gary, have we not? And probably more to come. So is that going to make a difference? Yeah, it will, for a little bit, I guess. Hopefully for a week or so, and then I can place that order. But I can assure you that's exactly what I will do on Monday if I see that. Oh, sorry, tomorrow. No, Monday. It's weekly chart. If I see that occurrence, that'll be definitely the case for me. So as I say, I'm not really concerned about what's going on fundamental. It's all about the technicals for me. Let's look at euro dollar, see if it's actually tradable before we go anywhere. You know, we say this every single day that I'm in this room. If we've got an untested daily pivot above us, then we trade long. If we get a setup, if we've got untested daily pivot below us, we trade short if we get a setup. Well, right now, if this candle closes as is, I want it up here somewhere really, but there's an entry underneath this candle. What have we got? 25 minutes to go. I'd really like to see the bulls push this up and close on the trade line or above it. That'd be fantastic. So there's a short on for euro dollar, in my humble opinion, and I don't see this as even a take profit. Maybe there's a level through there. Yeah, maybe you've got to take profit here. Get your first one in the bank, and there's your target. Not the daily pivot, but that low of the day is your target. But daily pivot is obviously where I think profit will go. So that's on, guys. 30-minute chart. Euro dollar short at some stage. Just keeps happening. Look, if you got in here, bang, you got all that. If you got in here, bang, you got all that. It failed on Monday and Tuesday, which makes it even far better for Wednesday. And sorry, it failed on Monday, failed on Friday and Monday. Not that it would have been a concern, because you would have been taken into the trade. You wouldn't have been taken into the trade. Here, was there a trade? Tough to get in. Maybe down here somewhere. Oh yeah, okay. Dominator there, in. Down here, that would have been tough to find the entry, and that of course is sometimes what happens. It's not crystal clear, but this one is. If it sets up, I don't want to trade it if it's a red bar. It's got to be a green one. Okay, I'm done, buddy.
Great stuff.
You've done the profit gaining. I've done the talking, and
yeah,
I'm not sure if we got anywhere with that, but hopefully you guys got something out of it.
Yeah, absolutely. And I would say be careful trusting any market moves for the next 24 hours because of Jackson Hole. We don't know what that's going to throw up. We should get a better understanding next week of what direction things are going to go in. But dollar is very, very toppy, and it won't take a lot to push that thing over. But Jerome Powell will have to say something relatively dovish, or certainly less hawkish, for that situation and scenario to transpire. And he could, the aggressive speak has just softened a little bit, so he might say something just a little less aggressive, just to try and buoy these markets as the US and Federal Reserve stay on their interest rate course, but maybe slow down the pace of it a little bit, and that might be enough to kind of drive the markets higher. But it's yet to be seen. The key is we don't know yet, and be very careful until we do have just a bit more information on that. Today it starts, but tomorrow we might get some more information. So maybe a bit clearer next week, mate. Let's see how we're going. Oh gosh, incidentally, Monday is a bank holiday.
Oh, that means it's our holiday.
Yes, that means our holiday. So we're not in next Monday. Need to let whoever it is know. But we won't be here on Monday, but we'll be back on Thursday with you guys.
Okay. Can you let James know that? That
yeah, I will indeed.
All right. And he'll get that out across the socials so that Marlon, take note, mate. Have the day off. That's awesome. And I didn't know it was a bank holiday.
Yeah, it's the last Monday of August, and it's the last one possibly this year. So after that, then we can get back to work proper. Okie
dokie. Righto, that is us. Thanks, Ash. Thanks for the money.
No problem, mate.
That you put in our accounts today. Thank you, of course, to you for being my trading buddy, and everyone in the room for being our trading buddies. We really appreciate your company. Thanks, Gary, for the questions. Hopefully we got those answered to some satisfaction for you, and we look forward to doing it again next Thursday, not Monday because it's a bank holiday. Have a great weekend, everyone. Bye for now. See you.